Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INRBonds. I'm Arjun Parthsati, and in today's government bond auction, the new 14-year bond issued by the government saw good demand in the auction, and the bond yield fell in the auction. The bond market bought the bond at 6.68% yield. The same bond in 2 weeks back was trading at 6.85%. The same, a similar 14-year bond was trading at 6.85% in the market. So yields have come down by 20 basis points. This is largely due to a few factors. One is India's inflation for August is expected to stay steady at around 5.6% levels. And also that the market is little more comfortable with government finances. But even more important, there has been a speculation that India bonds will enter the global bond indices, and if it does, then there will be a huge demand for Indian government bonds by foreign portfolio investors or foreign institutional investors. And this is expected to rise over the next many years once India is included in the global bond indices. And as you see on the ownership pattern in the chart here, that FIs or FPIs, they own only 2% of total government bonds, while most of it is held by banks, insurance companies, provident fund, and by the central bank, which is the RBI. Now, if FIs come to buy bonds, government bonds, then there will be less pressure on banks to invest in government bonds, and they can give more money to the economy through loans and other various lending facilities. And also that there will be a huge amount of liquidity, that is money coming in from portfolio investors, which will help to which will help to strengthen the value of the Indian rupee. These are all positive factors. And there has been a report by Morgan Stanley that when this India bonds are included in global bond indices in the beginning of the next calendar year, 2022, then the whole scenario of high investments by foreign investors into Indian government bonds can start to increase the kind of capital that is coming into the country, and also help the bond markets increase in depth and keep down bond yields and other factors. So that's the gist of the report by Morgan Stanley. And there are obviously risks associated with that. We can talk about it later. But at this point of time, it does look very positive if the whole scenario plays out as expected by the research analysts. Thank you very much and have a good weekend, long weekend ahead. And don't forget to subscribe to our YouTube channel, as well as to log into Quick Invest to find the best bonds to invest in your portfolio at the best prices and with the best information for making the best investment decisions. Thank you very much for listening.